Okay, folks, welcome to the Contrarian Trader and our post-trade review of Intel, INTC. I think you're going to get some value out of this video because it's not about how we made a profit on this trade. We did make $800 on the trade within a day and a half, which is, that's great. However, I disappointed myself on this trade. I didn't obey my disciplines, and I could have made more money using less capital had I not broken one of my own very rules. And it happens from time to time, but we learn from these mistakes and we move on. So let's get to our trade of Intel. As you know, Intel reported earnings on July the 15th, blowout earnings with the exception of the fact that their mobile division, which was weak, very, very weak, an underperforming segment of their business. However, the stock gapped higher on the 16th of July and proceeded into extreme overbought levels. Now, before I get into the daily chart in great detail and the 30-minute chart, let's pull back. At the Contrarian Trader, what I always like to do is I emphasize the use of multi-period charting, because what value does that give you? The value of multi-period charting, and in this case, this is a monthly chart, and I call this the 60,000-foot view of the battlefield, because trading is a battle. There's always a winner and there's always a loser. It's a zero-sum game. So what we want to do with Intel is identify where the stock has been. Is it breaking out of a consolidation? And do we have resistance above? Because we didn't long the stock, we shorted it. So before we opened up a short position, we wanted to identify historic resistance. And to identify that historic resistance, we had to use a monthly chart going back 13, 14 years to where we found resistance back in 2000. And there was prior resistance before that in 1999. So we identified where our resistance was, where our sellers were, and then we took a look at what kind of a base Intel was breaking out of. And it was a sound base, a very powerful base. And whenever you see a long consolidation like this and then a subsequent breakout, you had better respect it, especially if you're looking to take the opposite side of the trend. And although I'm a contrarian, that doesn't mean I ignore trends. I respect trends. But we also respect resistance levels, because when we know where they are, we are able to identify a good risk to reward entry point. Also, before I drill down to the weekly chart, I want to point out we had an inverted head and shoulder setup. Here's your left shoulder, head, right shoulder. This setup spanned from 2006 to 2014, where we finally broke out of your neckline. A very, very powerful chart here, folks. No doubt about it. So now let's drill down to our weekly chart. And in our weekly chart, we can identify a couple of other setups. We have a cup with handle formation. Here's your cup and downward sloping handle. We also have a rising pennant formation. And then we have a breakout of this pennant formation. And even if you draw your trend lines down here, you have a flag formation. Many different formations in this chart. All of them bullish. But what made me bearish on Intel, and I'm going to come back to this chart, was the daily chart. So they gapped the stock higher up on July the 16th, bringing RSI up to above 90. Initially, when I first shorted it, it was 89.96, just on the cusp of going over 90. So one might figure, had you read Technical Analysis for Dummies, which tells you to short a stock when the RSI goes above 70, that it's a no-brainer, that you have to short the stock. Now, while I disagree with Technical Analysis for Dummies that if you short a stock every time it goes above 70, that you'll make money, I'll take the opposite side of that position and say you're going to go broke. Because there's a reason why stocks go above 70. It's because they're strong, and they have a tendency to get stronger. So I would strongly advise not to short stocks that are above 70 until, of course, they get above 85, 90, and then you have the risk to reward in your favor. So as you can see, we peaked out on RSI at 91.81 on the 16th. Now, was this the only reason why I opened up a short position? No way. Let's go to the 30-minute chart. 30-minute chart, intraday basis. Here's where we opened up our trade, right here. And you'll note on this candlestick, on the 30-minute chart on the 16th, we have a topping tail, a wick, which implies that there are sellers above, and there were. And you had RSI intraday well above 85. Now, was this the only reason why we shorted Intel? No. Let's go back to the weekly chart. Here is what should be the upper band of your rising uptrend channel. We blew through it on the 16th like a hot knife through butter. So the weekly chart was telling us that the stock was now parabolic. All rationale to buy the stock was out the window from a fundamental and technical perspective. All rationale for those shorts that were getting squeezed was thrown out the window because they shorted too early into, back to the monthly chart, they shorted too early. They didn't recognize, using a monthly chart, that Intel was experiencing a powerful breakout, and they shorted way too soon. And now they were getting clubbed like baby seals, and they ignored the fact that on an intraday and on a daily basis, and even on a weekly basis, the stock was at unsustainable, overbought levels, and they just wanted to get out, take their losses, and move to the sidelines. But at the Contrarian Trader, what we do is we allow them to get squeezed, and then we short into their panic. And what we did prior to opening up our short position is we wanted to identify where our historic resistance was, and we shorted right into it. Now, earlier in the video, I said I made an error. I broke a rule. What was that rule that I broke? Normally, I profess to members, and this rule is really important whenever you short a stock, is that I profess that you should be shorting stocks or opening up a trade in the last half hour of trade. Why? It's because although the stock, and in this case Intel, although this intraday chart doesn't appear as if it can get squeezed any higher, it was able to, because as I said earlier, all rationale had gone out the window. All the shorts were getting squeezed. They weren't looking at the RSI intraday. They weren't looking at an RSI above 90. All they were looking at were their monitors and all the red that they saw on their screen. And the rule that I broke is that I saw the panic. However, I didn't appreciate that the panic could get a lot worse. I saw great opportunity with RSI 90 and figured with this topping tail that the path of least resistance would soon change to the downside, and I shouldn't have done that. I broke a rule. As the day progressed, I was getting squeezed, and I never like to be in that position. But I had the courage of my convictions that this rally was unsustainable and would soon break, and so we doubled up on our position later in the day. Now, had I shorted into the last half hour of trade here, I could have made more money with half the capital at risk. So that's the lesson learned, and I would prefer that my members learn from my mistakes than have them learn firsthand. So that evening, I went over the trade with members, and I pointed out that there was a double bottom setting up on the 30-minute chart, and that we might just see a continuation rally the following day, being the 17th, and that didn't occur. And that was good for us because the stock pulled back, and I would have held it. However, it rallied back, pulled back, held the day's lows, and that was my warning flag, get out now. And so we booked profits. So a good trade, a profitable trade. However, there was a lesson to be learned and shared with my members, and I hope if you're new to trading that you gain some value from this trade. Now, Intel, from my perspective, as it stands right now, is in a consolidation phase. It's now in a triangle formation, bottoming tails on Friday, and you may see a gap higher. And I may be looking to buy Intel as a long, and if it does reach an overbought condition once again at or near where we saw Intel trade on the 16th, well, then I will be looking to book those long profits and then shorting Intel once again, with our target price being the lows seen on the 16th. And if we break down below those lows, we'll probably come back down, fill this gap, and then we'll look to book those profits. So I hope you gained some value out of this video, folks. If you're watching this on YouTube, please subscribe to my channel. If you're watching this on my website and you gain some value out of this video and you'd like to see these videos sometime in the future, enter your email address. I hate spam too. You will not be spammed. Have a great trading week, folks, and I'll talk to you soon.